What's up, everyone? It's Kadi with MoneyVest. So it's time for us to talk about Tesla stock here once again as it continues to drop further. We've done analysis on Tesla multiple times in our previous videos. I've talked about how Tesla, in my opinion, is a pure EV company at the moment. It's an auto manufacturer, which many people have kind of disagreed with, but that's okay because everyone can kind of do the analysis. Everyone has their own growth story attached to certain stocks. So that's completely fine. Of course, no harm, no foul. But in this video, I wanted to really go over, Tesla's fair value, do the calculation here once again, and take a look at, why investors are so fearful of a Tesla at the moment, and they just continue to sell this stock left and right. And if you've got a long-term time horizon, 10 plus years out, then this video may be super helpful for you, because we are going to also do an analysis of 10 years out for Tesla and kind of come up to the intrinsic value for this company. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like. I would really appreciate that. And of course, subscribe to the channel if you haven't already. And the links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the members only private videos. And we've got the moneyvest.com platform that's going to be launching very soon. We are again working hard with the dev team. The design and everything is going to be done very, very soon. We're going to do a lot of the future features and upgrades over time. So not everything is going to be packaged and available at the all at one time, but we're going to do it over time, with many more features to be launched in the future. And also, if you want to get access to our newsletter, all of our trade ideas and alerts, links going to be down below for our Discord. Feel free to join. Now, the sentiment, as we already know, is really, really bearish on Tesla, right? It goes without saying that almost everybody is bearish on Tesla or does not believe in the company long term. I mean, Tesla is dead money. Yeah, Tesla, the disappointment continues. Tesla China counting the competition. So really, I mean, this has been pretty brutal for Tesla stock, and it's now the worst performing S&P 500 stock year to date. This right here is the analyst that came out with the downgrade on Tesla and slashed the price target by 38% on 135, about an average return of negative 5.8% with a success rate of less than 50%. I mean, it's quite crazy that a less than a 50% success rate with less than half a star rating for an analyst is able to pull down a company that is so big, well over $500-600 billion, and is able to wipe out so much in market cap in just 2 days by doing a downgrade on the stock. That just goes to show how pessimism and how the bearish narrative plays a significant role in any company, any stock, or just in general. If you are out there and having a very strong pessimistic view, people are going to get sold on that fear. People are going to get sold on that pessimism and on that bearish narrative. And it's very, very common, right? It's not true for optimism and not true for bullish narratives, but it is true for bearish and pessimism around whatever situation you find yourself in. And for Tesla, not only did we have really, really weak momentum, that's why I had a couple of videos going out talking about how 150 is incoming, 150 is possible, 150 is potentially going to happen, but of course, that's where the next support really is, and that's what we're here to discuss. Now, if you take a look at Tesla's earnings, right? So earnings expectation for revenue, let's just start with revenue, is around $110 billion. Okay, so $110 billion. So if you come here, do some very simple math, so $110 billion. The shares outstanding for Tesla right now is around 3.18 billion, so 3180 is going to be the actual share count for the company. Now, if you take a look at the profit margins for Tesla, so if you come over to quarterly numbers, we're looking at, let's say, bottom line net income, 15 billion on a quarterly basis on revenues of almost $97 billion, right? So that's a little bit over 15% net margins, but that of course has been coming down because the company has really been struggling with the margins and they've been compressing a lot. So if you come down net margins, 31% on a quarterly basis, but they have been in the 7 to 10% range in the past, with about gross margins of 17 to 18%. But of course, they have been coming down as well. So what we're going to do is we're going to simply account for like about 10% margins here. So 10% is about $11 billion, right? So 110 billion in revenue, about 10% margin is about $11 billion. Wait, hold on one second. So 110 billion is the revenue expectations, right? So just want to make sure. So yeah, 110 billion. Okay, perfect. So that's going to be the earnings, the net income expectations, and then you divide this number by this 345 earnings expectations. I think the Wall Street consensus is also closer to 325, 330, 340. But this number, is going to get downgraded because we just don't know if Tesla is going to be doing more price cuts and if the margins are going to compress even further. Really what Tesla needs is interest rates getting better, a little bit of help, of course, from quantitative easing because the macro environment is still squeezing out a lot of the borrowers because interest rates are so high. And then, of course, there's competition. So Tesla right now is getting hit from a lot of different angles. Competition over in China, interest rates being high, which is affecting the macro picture, and thereby Tesla's having to lower prices, offer more subsidies to spur more demand. So there's a lot of concerns that whether Tesla is even going to do 1.8 million or 2.1, 2.2 million vehicle deliveries this year, which Dan I've said, it's still very hittable, and the price target maintained at outperform rating at $315 price target from Dan Ives. But of course, only time will tell if that is indeed possible or not. So if we apply, let's say Tesla over here, and we're looking at a net income of about $11 billion if you plug that number in. So $11 billion, and that's again a little bit optimistic here for Tesla. If you apply a growth rate which is really low, let's just go with 20% here just to see what those numbers look like. You apply a 30 times P multiple, we're coming down with a fair value of close to 121, which is a little bit lower than my original fair value of 150. But if you go with, let's say, a 25% growth rate, then we're closer to 150, which I think was the original number that we had forecasted with a 30 times P multiple. Far more reasonable with a 25% growth rate and a trailing net income of 2024 expectations of about $11 billion. And this is also share dilution included. So if you don't include for any share dilution, we're looking at closer to 164. So perhaps we can come down a little bit on 22%. So there we go, $145 in about that intrinsic value. Now, if you apply these same numbers and take a 10-year approach, right? So if you go over to the 10-year discounted earnings multiple model, and we're plugging in, let's say, an $11 billion in net income, we applied 20% growth rate, 30 times P multiple, 0% share dilution. Now we approach at a fair value of close to $188. So if you believe the same estimates to be true for Tesla over the next 10 years, then we'd be looking at around $188 in intrinsic value. But of course, over the next 10 years, it's really essential for Tesla to become more than just an electric vehicle company. Because year 10, if you're appointing for $68 billion in net income, and that's only 10% without accounting for any margin expansion, 10% of $68 billion, right? So that's about $680 billion in total overall revenue, top line revenue. And the only way the company is going to be able to achieve that size and scale in terms of revenue, well over $680 billion, is if there is a component of technology, FSD, robotics, energy, and all the other things that Tesla is working on, cyber trucks. There's just everything kind of plays out over the next 10 years. And even then, $188 ends up being the intrinsic value, which of course would make Tesla undervalued by 16%. At these current levels, I think Professor Demodron's fair value ended up around $180, which I think is quite reasonable. But it's really, really difficult for any company to be growing at 20% long term. It's just, 20% for 10 years at that size and scale. Very difficult. Very, very difficult. In fact, very few companies are able to do that. Amazon is one of them. Google is one of them. Nvidia is one of them. Tesla in the past has been one of them, which has grown at over 15, 18, 20% revenues and earnings over the long term. So it's really difficult. If we apply, let's say, an 18% growth rate, then the fair value drops down to $160, and that's 18%. That's also, I would say, a little bit on the higher side, but it's doable. It is quite reasonable. So the bottom line is that Tesla is coming down to levels where if we can get anywhere between 18 to 20% growth rate in bottom line earnings for the next 5 to 10 years, Tesla is now starting to trade at close to its intrinsic value. If you want to be a little bit more conservative, right? So if you go with 16% earnings growth here, then we're looking at, of course, $134. Then we'll have to drop down the P multiple a little bit as well. 25 times, we're looking at low 100s. That's exactly where Tesla was over here back in April of 23. It was a lower over here in January of 23. It was in the low 100s at those prices. So bottom line is, of course, the more conservative we go with our estimates, the the lower the fair value drops down to. So 27 times earnings with 16% growth rate, looking at low 100s, but of course at a 29, 31 times multiple and a 18 to 22% growth rate, we're looking at closer to 130s and 150s for the intrinsic value for Tesla. The bottom line is that Tesla, if it can do at least minimum 15 to 18% growth rate over the next 5 to 10 years, and demand a reasonable multiple of about 24, 25. That's going to be a huge compression. That's down from about 75, 80. That's going to be coming down because earnings expectations are right now lower. Then there is possibility for Tesla to be trading at either its fair value or somewhat undervalued in the 160s. But 150s, conservatively speaking, 130s would ideally be a much better fair value for Tesla, just because the margin of safety, the margin of risk there is lower and the profit potential is significantly higher. So what I'm doing is mostly just selling calls, holding tight. We'll be looking at selling puts, actually, not selling calls. I take that back. Selling puts, because when the stock is down, that's when you want to be taking advantage of selling puts. And premiums are actually quite decent for Tesla puts here, especially in the 150s, down in the 140s, because you get to kind of lock up that collateral and generate that cash flow in those premiums while you wait for the stock price to come down to your price targets. So that's where we are. As unfortunate as it is, the momentum is very strong. We're just hitting a new low of day as I'm talking right now, down almost 4%, and the next support really is going to be down to $153, $154. So in the 150s is where the next support ends up for Tesla, and this is the overall downtrend of lower highs and lower lows, and 2 consecutive back-to-back weeks of red for Tesla, just breaking down really, really aggressively, with the RSI and the MACD also coming down to pretty low levels. So 150s is going to be that support level to watch for Tesla moving forward. So hope you all enjoyed this video, and let me know your thoughts down in the comment section below. Again, just be conservative, be mindful of how you're investing in this company, why you're investing in this company. Just understand your story behind investing in Tesla in the first place. For me, it's an electric vehicle stock that has a lot of potential to turn into something much bigger than that. I'm not betting on that much bigger aspect, but even as an automaker, as an electric vehicle company, as it scales its deliveries and it's still the leader in electric vehicle adoption, it's got potential to retrace back up to highs of 300s, possibly even 350s over the long term. Again, my hopes and my expectations and my dreams with Tesla are not for me to see 10x my return, but it's really just to see about a good 12 to 14% compounded annual growth rate over the long term, just by being an electric vehicle company and by including technology. It's just a cherry on top is what I see for Tesla long term. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. We'd love to have you on board with that 16% annual discount that's available until the end of this month. And as always, happy investing. I'll see you all in the next video.